Hello, everyone, and welcome to our training today on how you can get money from angel investors. This is going to be a complete guide on everything you need to know about angel investors so you can get an angel investor to invest in your business. So by the end of this training, you're going to know everything you need to know about angel investors, including multiple different places you can go to access angel investors, and you're going to know all the steps that you need to take to be able to obtain an investment from an angel investor. For those who don't know me, my name is Ty Crandall, and I actually specialize in helping business owners obtain capital, and we do so by helping you build business credit, by helping you access all these kinds of financing in one place, and by helping you improve fundability, the factors that lenders and credit issuers look at to approve you for funding. So if we can help you along the way, feel free to give us a ring. Our number and our link are at the bottom of our slides, and if you're tuning in on our podcast, you can give us a ring at 877-600-2487. So obviously, as I'm filming this, the world has changed, right? A lot's happening with coronavirus. We're kind of moving into a new way of doing business as the world begins to open up. And as a result of this, a lot of people are unsure what to do. A lot of people are unsure of where to go to get money. But the great news is that there's a lot of money available right now, and a lot of this money is actually coming from angel investors. So it gives you the ability to actually come in with angel investors and get angels or private individuals to actually invest in your business. It's still a really good place to be able to access the money that you may need. Now, again, getting the working capital you need to grow your business doesn't have to be too difficult. A lot of companies are trying to figure out where to go, and others have already figured out that angel investors and venture capital sources are great ways to go. Instead of getting money from banks, instead of getting money from the SBA system, then these are other alternatives to be able to get capital on top of that. Don't get me wrong, I'm not saying you have to choose one or the other. That's the great news, okay? So, with Credit Suite, for example, we're talking with angel investors and venture capitalists right now, but we also have SBA funding. So it's a great world where you can obtain multiple different kinds of financing, and angel investors is just kind of like a feather in your cap. It's just one more way to get money for your business. Okay, so what is angel investor? Well, according to Investopedia, an angel investor, also known as a private investor, seed investor, or angel funder, is a high net worth individual who provides financial backing for small startups or entrepreneurs, typically in exchange for ownership equity in the company. Often angel investors are found among an entrepreneur's family and friends. The funds that angel investors provide may be a one-time investment to help the business get off the ground, or an ongoing injection to support and carry the company through its difficult stage. Bottom line is, angel investors typically give you money in exchange for some kind of ownership equity in your business or the equivalent of shares. Now, Elsie says in the YouTube chat, hello, can we help with the 700 credit that just had one credit card? We can. We have a great program called Credit Line Hybrid that can work for that scenario. They're typically going to want you to have a $2,000 credit limit or higher, and on that one card you have in some kind of mortgage or auto loan. So if that makes sense, give us a ring. We'll talk to you more. But then you can get up to $150,000 in no-doc credit lines with that program. So give us a call and talk more, Elsie. We'll definitely spend a few minutes to get you approved. So history of angel investors. Well, this term actually comes from Broadway theater. Angels were originally the investors who backed plays, and they still do. These people are also called patrons of the art. Okay, so pretty interesting there. Angels are not covered by the SEC standard for accredited investors, but a lot of them are accredited investors anyways. Now, per Investopedia, an accredited investor is a person or entity who is allowed to deal, trade, and invest in financial securities as long as they satisfy one or more requirements regarding income, net worth, asset size, governance. So that's the difference. You're going to hear a lot of this. If you're going to deal with angel investors, you have to know some of the terminology here. And an accredited angel investor with the SEC meets this criteria. Okay, and actually, and I don't know if we'll get into specifically what the criteria is, but I'm pretty sure you have to have a net worth of $1 million plus and like $250,000 a year in annual income to be an accredited investor. It might be a little off on those numbers, but it gives you an idea of you have to have a net worth requirement, you have to have an income requirement to typically qualify as an accredited investor. So who's the most prolific angel investor? Well, the biggest angel investor is Jeff Clavier. Now, he's invested millions of dollars in over 200 companies. He's the founder of a seed venture capital company in Silicon Valley, Uncourt Capital, and he's both an angel and a venture capitalist. So we're going to talk about the difference between those today. So who else can be an angel? Well, there are a number of angels who aren't millionaires. They can be friends or colleagues sitting on home equity or local professionals who are looking to invest. Consider people you know well and people you don't know so well. So when it comes to angel investing, there's two types of angel investors. You've got angel investors that are affiliated and unaffiliated, as we'll talk about. And most angel investing actually comes from affiliated angels, believe it or not. It's coming from people around you in your own network. So, for example, I spoke with a buddy of mine, Mike Weiss, the other day. He owns a phenomenal company that helps education, that provides educational content and helps you basically redo your educational platform. So, Credit Suite, we help businesses build business credit. He comes into a company like ours and helps us gamify and improve our process of actually delivering that content, that educational content to our clients. And he just actually raised some funds for his business. And this was the first thing. I said, where did you go to get that money? He said, I went to our mastermind. So when he named off the 5 investors that put in initial funds, these were people that him and I both knew that were in our mastermind. So those are called affiliated angels, people that are in his circle. And a lot of angel investing comes from these affiliated angels. So what's the difference? Well, affiliated angels are people you know, such as friends and family, coworkers, managers, employees, customers, suppliers, vendors, even competitors. So it's very important to note that there's a lot of people around you that are very frustrated and don't want to invest their money other places. So for example, right, my parents, like many of our parents, have money invested in the stock market and they are retired. So right now they're really freaking out with everything that's happened in the economy because, the economy is cyclical. When we have recessions, everything in the value of their stocks and their assets decline. And when everything is great, everything increases, right? So your retirement, when you're basing it on the stock market, it ebbs and flows. And depending on when you retire and what happens during your retirement really determines the value of those assets you have. A lot of people don't like that for obvious reasons. They want to invest their money where they can get better returns than they can in the stock market, even real estate. They want to invest their money where they think they have a better chance of earning a return. And a lot of those people choose to invest in companies. They choose to invest in private or publicly owned companies. So think about it. Stocks are the investing into a publicly owned company. Angel investing is investing into a privately owned company. So a lot of the people around you, your friends, your family, your coworkers, managers, employees, customers, suppliers, these are the people that will actually be the ones that will give you the money you need to actually get the money into your business from angel investors. They're affiliated angels. And Elsie said that one credit card she has to get that credit line hybrid program has a $9,000 limit. So that's great, Elsie. That would definitely qualify you. So give us a ring. We'll talk to you a little bit more about getting approved for that program. Now, unaffiliated angels are people you don't know. They're area professionals. They're entrepreneurs. They're actual full-blown angel investors that's what they do. They're middle managers unsure about their financial futures, looking for an investment. So and unaffiliated angel investors are likely to obviously need more assurances from you than people you don't know. As a matter of fact, the reason I tell you about affiliated and unaffiliated angels is a lot of time to go to an angel investing network, which I'm going to show you where to go here to be able to get money from angel investors. To get money from these unaffiliated angels, they want to see that affiliated angels have given you money. And it makes sense. If I'm an outside investor and I don't know you or your company, if I come to you and say, where else have you raised money? And you say, I raised $50,000 from my friends and family. Well, that gives me more confidence because if your own friends and family, if your own network is willing to give you $50,000, then that gives me some peace of mind that if they trust you, there's a reason that I should trust you. But if I am coming to you and say, where else have you raised money? You say, nowhere, you're my first stop. Well, then that makes me nervous because if the people around you won't invest in your company, well, then why should I? So a lot of cases, unaffiliated angels like the fact that you've received money from people affiliated with you and affiliated investors. It gives them more peace of mind because the people in your own circle will invest in you. Well, then it makes sense for them to want to invest in you as well. So what do angel investors do? Well, they are informal investors. They generally invest in the start of a company. And this is in exchange often for equity. So remember, there's 2 ways you can get money for a business: debt and equity. Okay, primarily, those are the 2 ways you get money, which means that you can either get a loan where you have a debt that has to be paid back, and that debt has terms. Like I have to pay $1,000 a month to pay back that loan. That is debt. Then there is equity, where you are giving people equity in your company, ownership interest in your company, stock in your company in exchange for the money. Now, the difference with equity investment like this is it typically doesn't have to be paid back on a regular monthly basis. It's not like a loan where you have to pay a little bit back to them every single month. Typically with angel investment, they're looking to make their money when you exit, when you sell, when you go public, when you get another round of funding. So they are not looking to get money monthly like you would with debt financing, and you don't have to pay money monthly like you do debt financing. Instead, they are actually getting paid out whenever you exit, whenever you potentially sell the business. That's the difference between equity investment and debt investment or debt. So when it comes to equity, then what it really comes down to is these guys want some kind of ownership interest in what's going on. They want to have, now usually not a lot of control, but they want to actually get a return when you sell your business, when you exit, when you go public. So what's the most prolific angel investment of all time? Well, Jeff Bezos gave $125,000 in 1998, investing at 4 cents a share in Google. And the original investments made over 10,000 times their initial value. Bezos also got in on Twitter in its second round of funding. This is why, according to Bloomberg, he's worth over $100 billion. So we know Jeff because he's the one that started Amazon, right? But a lot of us don't realize that back in the 90s when he had money to invest, what happened was he decided to invest into the internet. So he put this $125,000 investment into Google, which obviously was a huge success. He also started Amazon about that time to get into the internet by selling books online. So and invested in Twitter. So a lot of us think of him as the guy that runs Amazon, but we don't realize that he's one of the most prolific angel investors of all time as well. So what sorts of risks do these guys take? Well, angel investors who seed startups which fail in their early stages will lose their investment completely. Angel investing is very risky because the majority of businesses fail in the first 5 years that they're open. So venture capitalists, and we'll talk about venture capitalists, they invest in more established businesses. Venture capitalists tend to invest in your business when your business is actually generating revenue, potentially even generating profits. Angel investors are coming in based on an idea, a theory, a concept with nothing proven in investing. So their risk is very, very high because the majority of businesses they invest in will fail. Now, there's no FDIC for angel investors. Okay, therefore, professional angel investors look for opportunities for a defined exit strategy. They want to make sure they're going to get their money back in 3 to 5 years. They want to make sure you have a plan to get acquired, the plan to sell, a plan to go public in 3 to 5 years. That's their protection. So the way that angel investors handle this is they realistically know that about 1 out of every single 5 investments that they make, or 10, will actually pay off. The other 4 out of 5 or 9 out of 10 are going to fail. So they know that the majority of investments that they make are going to not work out. But what they're doing is hanging their hat on huge returns on the investments that do work out. Angel investors actually seek out very high risk endeavors with very high rates of return. So they get in, and unlike lenders that are FDIC or that are insured by the federal government, right? And that's FDIC. So a bank is insured by the government. So they're required by law to be very conservative with their risk. But angel investors are the exact opposite of banks. They take massive risks, massive leaps of faith, and then they're hoping for a massive rate of return as a result. They know that most of them will fail, but the ones that succeed could be an Uber, could be an Airbnb, could be a Facebook. That's an absolute home run, which is why they do what they do. So the effective internal rate of returns for angel investors success portfolio runs about 20 to 30%. So if you look at other companies, you look at the ones that fail, you look at the ones that succeed, you average it out, they're getting about 20 to 30% on their investment. Now, we talked about the stock market earlier. Think about that. You're never going to get that kind of return on the stock market. So this is why angel investors exist. They know some of their investments will fail. They know some will be home runs. On average, they're coming in and earning 20 to 30% on their money. So it's a way higher rate of return than most people are going to get on the stock market and that banks are going to get, etc. But bank loans and credit are often not an option for startups. So this is a great option for startups where a lot of these other options aren't going to work. And as a result, angel investment can be ideal for entrepreneurs who are just struggling to get their business off the ground. This is really where angels thrive, is in the startup of a new business. So how can a company get angel investing? Well, companies can connect to affiliated angels by just asking. Remember, affiliated angels are brokers, cold calling, intermediaries, and networking, right? So, for example, I know people in my mastermind that are very good potential investors. Those will be the first ones I go to. So when I talk about affiliated angels, you might say, well, I don't want to go hit up my mom and dad or my family and friends for money. Well, then you don't have to. If you look at my world, when we go to raise capital, the very first thing we are going to do is we are going to go to the people in our masterminds. These people have high net worth. They understand understand our business. They understand our model. We already have established relationships with them. They are what we call affiliated angels. So as a result of those affiliated angels, we will go and get our investment initially from these affiliated angels, and then again, they will then introduce us to other people we don't know. So that's actually using our intermediaries. This is using our networking to talk to people we do know that have money, that know other people that they know that have money, that can make those introductions. Now, there's a lot of places online you can go to, and one of them is called Gust at gust.com. Now, they keep a database of investors, companies, and programs that can help you. Now, startups can also search for business plan competitions and more, okay? So that being said, it's very important that you know that Gust is a great place to go to access all kinds of potential investments. Now, working with them, well, they look up investment groups. So it includes a profile with information on which industries they typically fund. This is important. A lot of angel investors want to contribute some kind of value. So let's say, for example, a Credit Suite, that we decide to invest in another company. Well, we want to invest if we could provide value. So maybe we want to invest in an SEO company. And we say, look, like our customers need SEO. So by investing in you, we can help our customers get a service that they need. And then we can get a service that we need. And we know your customers. You deal with business owners. We deal with business owners. It's the same industry that we're servicing as business owners. So we can help you grow your business. So this is an example. They like to work in industries they know and understand, so they can contribute value. Now, on Gust, you can look up programs, including deadlines and basic information like the amount of money that they want to fund. You can look up companies, including a portfolio where the founders can add basic information in a pitch video. So Gust gives a search for angel investors more organization. It just makes it easier for you to find people that are actually interested in investing into your specific industry. But of course, it's not the only way to find angels. You can also try Angel List at angel.co. Or try the Angel Capital Association at angelcapitalassociation.org. Now, you can directly contact investors through both of these platforms. So these platforms just pool together investors and help link you, somebody that wants an investment, with the actual investors that give that investment. Now, downside to working with angel investors. Well, according to Entrepreneur Magazine, there are downsides to working with them as well. You could be giving away equity in your company, of course. You have to keep that in mind. You could be giving away equity that amounts to tremendous amounts of money, okay, just for getting that initial investor. So there's example stories of the early days of Facebook where the painters that painted the walls inside Facebook headquarters, Facebook didn't have the money to pay them, but Facebook paid them with equity. Can you imagine? I mean, those people made millions of dollars by painting the inside of Facebook because they took equity in exchange for their work. So these businesses are getting some kind of ownership interest in your business. And if angel investors think you're the greatest obstacles to your company's success, well, then they could fire you from your own business. They could remove you from your own business. Now, venture capitalists and angel investors are different. As I mentioned, angel investors get involved early in the process. Venture capitalists later. Venture capitalists want to be on your board of directors. They want to make decisions that control the decisions you make as a company. Angel investors usually don't ask for a board seat. They're giving you guidance. They're giving you help, but they're not typically wanting to control your company, but some do. So those are some things to keep in mind. Now, other ways to find angel investors. Well, Entrepreneur Magazine has a great source called ace.net, Angel Capital Electronic Network, ace/net. Okay, they also suggest trying every possible investor because being turned down by hundreds of investors doesn't mean the 101st won't turn you down. Okay, Entrepreneur also notes that an angel investors will often start small, so if you could prove your concept to them, then they will provide more funding. So keep in mind, a lot of angel investors invest $25,000, $5,000, $25,000, $50,000, $100,000. These are smaller increments of money than venture capitalists. So I talked to a venture capitalist the other day. His investment starts at $3 million. The bare minimum that they will invest in a company is $3 million. So you know they want a lot of control. They want to control the decisions that are being made in the company. Somebody that's contributing $25,000, not as much. Now again, a lot of angel investors investors, the way they work is that if they give you some money and you prove success and you say, look, here, I've kept you informed along the way. Here's what's going on. Here's where we are. We used your money for this. We grew. All these results came from it. Well, there's a good chance they may give you more funding when they see that things are going the right direction. There's also an even better chance that they'll introduce you to venture capitalists. Remember, an angel investor wants to have an exit in 3, 4, 5 years. So let's say they give you 10 grand and you grow the business with it, and they go, I need another 25, and they give you another 25, and you grow the business with it. And now you say, I need 250,000, and they say, wait a minute, that's more than I'm willing to give you. But I know a lot of venture capitalist friends that would be interested. They've seen your growth, we've seen your success, and then they go to their venture capital friends and introduce you, and now all of a sudden they are the segue to getting you venture capital. Think about it. If you're a venture capitalist wanting to invest a lot of money into businesses, one of the best lead sources you could get is an angel investor, because angel investors got in on the ground level. They see their most successful companies that are growing, and then they can then partner with venture capitalists, bring the venture capitalists in the deal. The venture capitalist puts in more money, the company grows even faster, and everybody wins, including the angel and including the venture capitalist as well. So what are the biggest angel investor groups? Well, New York Angels Inc., Alliance of Angels in Seattle, and Pasadena Angels per an entrepreneur article. And this was a while ago, were some of the bigger companies that do angel investments historically. Okay, now according to Entrepreneur, here are some other ones as well. Hyde Park Angel Network, Band of Angels, North Coast Angel Fund, and Golden Seeds LLC. So see, these are some of the biggest angel investors in the country, so you can get a feel for who they are and do some research into that as well. And yet here are some others when it comes to groups. Investor Circle, Tech Coast Angels, Ohio Tech Angel Funds. Groups focusing and requirements vary, but some concentrate on local startups only, so you might have to be in that area. So read up before you ask. Don't waste your time, but these are the groups, these are the biggest investors, these are the biggest networks, these are the biggest groups that you want to look into and research. So for example, if you research one and they say, look, what we do is invest in software companies, and you make pancake mix, well then obviously that's not a good fit. So try to find ones that focus on your industry, your verticals, to make sure that they're the best fit. Now there are angel investor groups which focus on female entrepreneurs such as Pipeline, Angels, and Bootstrap Capital. Okay, LGBT Capital and Grangels both specialize in DBQ entrepreneurs. Backstage Capital and Minotank both focus on minority business owners. Startup 52 works with business owners with disabilities. Okay, so again, if you're in one of these groups, then this is actually angels that will specialize just in helping you. So again, whether you're a woman entrepreneur, whether you're a software company, whatever it is that you are actually, the type of entrepreneur you are, or the type of company you have, there are special niche investors that may work better with you than work with other kind of companies. So again, let's talk a little bit about angel investors versus venture capitalists. Angels are not quite the same as venture capitalists. As I mentioned, angel investors get involved in the early stages, and they're wanting, 5, 10, 20, 25% of the investment. Okay, and they also want less control. They don't need to sit on the actual board. Venture capitalists, they don't typically invest in startups. They're typically investing in very high growth companies that have already proven that they can grow, that have a proven exit strategy, that plan on selling or exiting or being bought by somebody or going public in 3 to 5 years. They want a larger piece of the pie. They want a larger equity stake. They want to own more of your company. They want to have somebody sit on your board of directors or create a board of directors so they can control the decisions that you actually make. Okay, so again, the biggest difference is angel investors get involved very early in startups. Venture capitalists usually get involved once you're producing revenue. Angel investors typically don't want a seat at the table per se. They don't want to be on your board of directors. Venture capitalists typically do. So some things to keep in mind there. So remember, angels can be wealthy people and not wealthy people, right? Depending on if they're accredited or not accredited. They may want 20% or so of your actual business. Angel investment groups sometimes specialize in special types of entrepreneurs. So find groups that work with your specific niche, whether it be business or whatever it may be. There's some based on different categories that investors will invest in versus software versus other. Okay, it may help to check before approaching them to see if they're a good fit for you. Angel investors are great for startups. Okay, they often oftentimes want a small piece of your company in return for actually giving you an investment. Now, keep in mind at Credit Suite, if it comes to getting loans and credit lines, we never charge you a dime of money ever, so we can help you get the financing you need through all kinds of sources, including individual investors, okay? And we help you build a blueprint for your business to get the financing you need, even through SBA loans. So our goal is that you never need to look for money again. So if we can help you with getting introduction with angel investors, getting other kinds of capital, building your business credit, make sure you get in touch with us, 877-600-2487, or you can get approved at creditsuite.com/get funding. Also, don't forget that we go live on YouTube multiple times per week, live on Facebook multiple times per week, live on Instagram weekly. We have daily tips on Instagram, Facebook, etc. So please go ahead and like our channel and like this video to know that we did the right thing and that you got content and education from this, and then that will give you a good chance of getting notified when we go live again. And visit our page, creditsuite.com, the top right of our page. There's all kinds of social links where you can connect, even listen to our podcast on the go to help you get more capital to grow your business. Thanks everybody for tuning in. Get in touch with us so we can help you get money to